Hello, everybody. Today we're going to talk about 10 things every beginner investor should know. When I started out my investment journey, it was strictly based on this one company called Zenyatta, and I got into the investments strictly based on the hype. I don't know if I didn't know much about the investment world at that time, but I jumped in because the other coworker was jumping in, and I lost a bunch of money. Now that I'm making these series for my listeners, I think it's important that there are a few things that are laid out so we can see a better success in our investments that I didn't know of at the time. So these are the 10 things that I personally feel are very important, and hopefully it will help you guys out as well. Number one, having an investment goal. As I shared in one of my previous videos, if you haven't seen them, please go watch them, like them, give me comments. My investment goal is having $1 million in my bank account by the time I'm 30. I'm 65. Right now, I'm 37 years old. So I only have 28 years to get to that $1 million. But that's my goal. There could be people out there, their goal could be just to save enough money for their kids' university or kids' school or their kids' car. So their goal could be $100,000 in 10 years. Whatever that goal might be, it's important to know your goal, because that is going to guide you towards your investment journey, towards your investment goal. The steps that you take, they all come from what your goal is. So have a goal, write it down, and then make your plan. Number two, know your risk level. It's important to know if you're risk averse or if you are a risk taker. When I started my investment journey, I didn't know any of that at all. I threw a bunch of money on one stock and lost quite a bit of money. Then I realized it sucks to lose your own money. So then I knew that I was risk averse. But then I started thinking about, okay, but I still like the gains. I would still like to gain a little bit of money. So my approach has been a balanced approach ever since. But there are times when I have got into growth stocks and I have left in my portfolio, knowing very well that I have good 28 years, and if the stock goes down or the investment goes down, initially in first 2-3 years, I have 25 years to make up for it, and you know what, the stats are that you will do okay. We just have to be patient. So know your risk level, because that's important, because then you can avoid panic. If you are risk averse, get into a government bonds. They are safe investments. If you are a risk taker, get into growth stocks. And if you are a little bit of both, then get into balanced. Have a portfolio where it's diversified. You have mature companies and you have growth companies. Expected rate of return. In one of my videos, I discussed that how in the last since 1971, the stock market has given 6.9% in the investment 6.9% growth. So the expected rate of return, if you're fine with only getting 1% return on your investment, leave it into the some checking account. But then if you want to see a growth of between 10%, then you know that you have to do better than what bank is offering you. My expected rate of return is only my expected rate of return, the way things are, I need to do better than the 6.9% during the course of my investment journey to get to the $1 million. So I have to find a way to do that. Number 4, know your monthly investment budget. It's very important to know how much you can afford every month, every 6 months, every year in your investment portfolio, because that's how you will grow your investment portfolio. You just in one of my in my videos, I showed that I need $25,000 initially and need 37 years at 6.9% for my investment portfolio to get to that 1 million mark. But I don't have $25,000 in my portfolio. People, those who have seen my previous video, please go take a look. I only have $10,000 in my investment portfolio. But as I said, I'm a CPA. I have a stable job, so I do have some plans of how I'm going to try to achieve that $1 million mark. I do get a bonus at the end of the year, so I'm planning to put a chunk of my bonus into my investment portfolio and at the end of the year to make up for that initial investment, which I didn't have at the time. And I don't have 37 years. I only have 28 years. So I know during the course of my investment journey, there will be time where I'll have to beat the market in order to get to that my $1 million. But right now I'm sticking with $100 every week. Could that be a week, or I could do a lump sum, the $400 every month, or $5,200 every year. There are 52 weeks in the year, but I am sticking with that for now. But it might change. Trust me when I tell you, there will be times where you can put more money into investment portfolio, and then there will be times where you can't put much money in your investment portfolio, and that's fine. And that's absolutely fine. My goal is $1 million, but if I end up at $700,000, $800,000 by the time I retire, it's pretty sweet. It's still pretty good. But yeah, knowing your budget right now, it will help you quite a bit. Number 5, understand the importance of compounding. If I was to explain compounding, I do it this way. Imagine having a snowball, and then you roll a snowball off the cliff. As the snowball rolls down, it picks up more snow, gets bigger, and it rolls down, it picks up more snow, gets bigger and bigger, and as it reaches the bottom of the cliff, it's a lot bigger than where it was when you initially let go of the snowball. That's exactly how compounding works. You put money in initially, a little bit of money, you put more money, you don't take any money out. Any growth in the investment portfolio gets invested back into the market, and the initial capital and the growth makes more growth, and that's how it gets bigger and bigger and over the years. So understand that compounding is very powerful. Keep the cost low. My goal has always been that I wanna trade cheaply. There are times, there are platforms out there that charge you quite a bit for what they offer, but I don't want to spend gazillion amount of money on the trading fees, because I don't have gazillion amount of dollars in my in my trading account. So I like to keep the cost low. That's why I make up with my own research before I get into a stock. Understand diversification and why it's important. So diversifying your portfolio is very important. As my initial investment, Zenyatta, it was in earth minerals. It was one company. I put all my money in one company. It started losing. I lost most of my money. But there isn't only one industry out there. There's gas, there's banking, there's tech, there is airlines, restaurant. So there are all of these other industries out there, and then any given time, not all of the industries are doing poorly. unless we're in 2022, the we saw Russia invading Ukraine and the stock market, or all the investments crashed. It could happen, but there are, even in this time, even right now too, not all the stocks are doing as poorly. Some stocks are doing very, very poorly, and some stocks are, they're doing bad, but not as bad. So having the diversification just makes up for it. If it's if the markets are doing great, they're going up, you'll see that you'll have some red stocks and you'll have some green stocks, and then that's every day. You'll have some red stocks, you'll have some green stocks, but as long as you have more greens than the reds, your portfolio will grow. And that's what we want. understand Understand different trading platforms. So as I mentioned in my previous slides, that there are some trading platforms that charge you more and some charge you less, but it's important to know the trading platforms, why they charge you more. There was a time when I wanted to get into a stock, and I was talking to my buddy Chris, and I wasn't able to get hold of him. And the stock was at 10% when I was looking at it, and when I put my money in and and hit that fill order button, the stock was already actually at 30%. Then I found out that the information that I have on my trading platform isn't real time. It's actually delayed by 15 minutes. And 15 minutes for a stock that's in the news, that's a lot of time. That's lots of time for it to be at the 30%. So if I had the real-time information, I wouldn't have jumped into the stock, being that it was already up 30% for that day. So it's important to know your trading platform, to understand how, it's important to know that if you're getting the real-time information or not. Number 9, ignore something you don't control. There are a lot of things that happen in the world that we don't control, just like, this Russian invasion on Ukraine, which has brought the stock market crashing down. The COVID did that a few years ago. Natural disaster could do it. Government policies can do it. There are a lot of things that we don't control. So just ignore them. The best advice that I could give you, which I was given by a lot of other good investors, is that have some patience. If you have 20-30 years and the stock that you have got yourself into are good, just stay that way. Keep those stocks. Don't panic. And and you, in the end, you will be on the winning side. So don't worry about them. Number 10, and most important, do not panic the way I did it numerous times. Don't panic and start selling or start buying, because that's the worst thing that you can do. There's been numerous times when I got into a stock, as soon as I got into a stock, and it feels like every time I get into a stock, it starts to go down. And it was going down, it went down. It went down 20%. And I panicked, and I sold out. I cashed my money out, and then if I would have just stayed for 2 weeks, 3 weeks to a month, I looked at the stock again in a month, and it was back to where I purchased at and more. So I would have made money, but I panicked and I sold. So that's what I have for you guys today. If you like my video, please hit the subscribe button. Please like my videos and give me comments. I honestly just only have one comment so far on my videos, but I want to see more comments. So please comment and give me tips.